Okay, students, Assalamu alaikum. Today we have to continue our O levels paper of June 2022. So here is your paper. Uh, okay. We have done question number 1 and 2 in our previous video. Today we have to complete question number 3, 4, 5, inshallah. Okay, so let's see what's happening. Okay, now question number 3. Musi is a trader. The total of his trial balance at 30th April 2022 did not agree and the difference was placed in a suspense account. Musi later discovered the following errors. Commission received 96 had been debited to the discount received account. The entry to the bank account was correctly made. Now, commission received was supposed to be credited, but it was debited to discount received. So what we have to do, we have to credit commission received because it is left. We have to credit discount received because it was wrongly debited, and we have to debit suspense account by double amount. Getting my point? So error number 1. Error number 1. What we have to debit? Suspense. And what we have to credit? Discount received and commission received. Ninety-six, 96, 192. Okay. Now error 2. Do we have enough space here? No, no, no. So what's error 2? The total of the sales journal for April 2022 1258 was transferred to sales account as 2158. So what is the difference? My calculator is not working. Started bubbling. See, 2185 minus 1258. 927 sale was overstated. So sales is always credit. When we have to decrease the sale, we will debit sales and we will credit suspense account. Getting my point here? So error 2, sales, debit and suspense, credit. That was how much? 927. Okay, done. Now third, a check payment for motor expense 77 had been omitted from the bookkeeping record. This is not error affecting trial balance. This is an error not affecting trial balance. Okay, errors affecting trial balance. No, errors not affecting trial balance. So this is an error of omission, and it is going to be recorded like this. Error number 3. Error number 3. And motor expenses. Bank. Amount was 77. Now error number 4. What is error number 4? A payment of electronic transfer 135 was recorded as payment in the petty cash book. The payment was made by electronic transfer, means from bank, but it was shown as a payment from the petty cash book. So we have to debit petty cash book and we have to credit bank. Debit petty cash book because it was not petty cash, and credit amount 170. Now the last error, error number 5. An invoice received from Tracy 160 was credited to the account of Stacy. Oh, this is also error of commission, not affecting trial balance. Okay. So when we receive an invoice, we have to credit Tracy, but we credited Stacy. So we have to debit Stacy and we credit Tracy. Very confusing. Very confusing. Now number 5. Here, Stacy. Yep. Stacy. Stacy. And Tracy. How much was the amount? 160. Done. Now next. Difference include the original difference of the trial balance and balance entry here. So we don't know where the opening balance of the trial balance would be. The suspense account would be debit or credit, we don't know. So we'll start from here. What we have to do here, we have to write 2022 on both the sides because we don't know where we have to come up with. Now in our first entry, we have debited suspense account by 192. Okay. So leave the first line, and here the date would be April 30. I don't know. Now we'll write discount. Received. 96. Commission received 96. 96. Okay. And one entry was suspense was 8927 for sales. 927. Done? Okay. Now there is no other entry, so we will say that the total over here would be 927 minus 927 minus 96 minus 927 minus just look at it. 735 is the full balance here. Total here 927. Done? Now, the drafted original profit was 39. Drafted profit was $39,970. Now, add discount received 96 and commission received 96. Now, less sales. How much was the amount of sales? 90%. Nine, 27. Then any other expense? Yes, any other expense. It was not recorded. Done? So now corrected profit. Here is corrected profit. Corrected profit. 39,970 minus 96. Why are 39,970 minus 96 minus 96? Oh, sorry. 39970 plus 96 minus 127 Done? Okay. Bye bye. Next question. Question number 4. Nala is a trader who buys and sells stationery. She provides following information about inventory 30th February 2022. Number of units, cost per unit, carries inward, selling expenses, selling price per unit. Calculate Nala's value of inventory. So what we have to do here, now we'll take here items. Let's say packs of paper. Packs. Now number of units. What is right here? Cost. Cost is 4.5. Yes. Dollars. And NRV is $8. NRV is $8. So it means we have to keep the inventory on lower of cash cost or NRV. Okay, according to prudence concept. So what we will do? The value of inventory 240 units multiplied by 4.5 is equal to 4.5 multiplied by 1080. 1080. Now we will take what's next? Packs of envelope. Packs of envelope. Cost price is how much? 5.5 plus carriage 6 plus 1.5 selling expenses. So selling expenses will not include, but will include carriage inward. So that will cost would be 6.5. Okay, 6.5. NRV 10. So it means the inventory will be kept on lower of cost or NRV, whatever it is. So we'll write 225 multiplied by 6.5. Okay. So the value of inventory would be 225 multiplied by 6.5. 1,462.5. 1,462.5. Now notepads. Notepads, the cost is $6. Okay, $6. And NRV $5. So we have to keep the cost of inventory or NRV 150 multiplied by 5. That would be, I think, box of pencils. Now see the box of pencil. Cost per use 3.5, selling price 6 means cost is 3.5. Selling price is 6. NRV. It means we have to keep inventory on cost because this is lower 96 multiplied by 3.5. Okay, 96 multiplied by 3.5, and the answer will be 96 multiplied by 336. That is 336. Okay. Now we have to take the total of inventory over here. So total of inventory will be how much? Cost of ending inventory 1080 plus 162.5 plus 750 plus how much it is? Answer is 3,628.5. 3,628. This is the cost of money. Getting my point? Okay. Something. Accounting principle for valuation of inventory. Prudence. Prudence. Computer, printer, paper. We have to tick. Is a revenue expenditure? Yes. Computer equipment is capital. Installation is capital expenditure. Motor vehicle is capital expenditure. Insurance on motor is revenue expenditure, and delivery of motor vehicle is capital expenditure. And okay, capital expenditure key, the biggest sign it incurs once. Okay, don't forget that. Are we over? Explain how the material principle apply to the treatment of non-current asset. Now see. Now, a big organization like Microsoft, a big organization like Meta, they treat all their computers as an stationary expense. They don't keep computer as a non-current asset, and they don't record what you call depreciation of those assets, because they have thousands of computers available in Meta. They can't track the record of those assets as those computers as a non-current asset. Okay. Now, so materiality concept says that when an asset is comparatively very small for a big organization, they don't keep it as a non-current asset, but they treat it as an expense on of the current period. Are you getting my point here? Okay, now when I treat the receipt of a bank loan as a revenue receipt, so it means effect on capital. Okay. Nala has treated. Okay. Revenue receipt. Revenue receipt means bank loan is not a liability. So uh, that means capital is going to overstate and liability is going to understate. Because revenue receipt means your profit is increased and your liability is decreased. Nala has charged depreciation on her shop putting at 25% per annum using a reducing balance method. Here she is considering changing it to 10% annum using this statement, as this would improve her profit for the year. No, the thing is, this is against consistency. But the thing is, all those assets which are not efficient assets, like generator or machine, these fittings are those assets which, like machines or cars, automobiles, they depreciate by with the usage. The efficiency of those assets decrease with the usage. But these fittings and furniture, these assets, they depreciate by the time. So I think straight line method would be better, easier. But now changing is against consistency. Okay. Again, blank page. Okay. Now question number 5. Trial balance is given. This is the trial balance of limited and liability company. Okay. 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 What she asked for? Income statement. So what when we are making income statement, we have to be very much careful about. Now income statement starts with revenue. So how much is the amount of revenues? 203,600. 203,600. So we are going to report it over here in the second column, 203,600. 203,600. Okay. Now heading cost of sales. Okay. Cost of sales start with inventory. Inventory, or that was 30th November is the last date. It means 1st December 2020. Oh, 2020, the COVID year. So how much is the amount of opening inventory? That is 12,945 and purchases 143,750. Okay. I think carriage inwards are not given. No, 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 no. Okay. So here we are going to write inventory. The amount was 12,945, 12,945. Then we write purchases. Purchases amount was 143,700. Whose amount? Now we'll take, yeah. Now cost of goods available. Cost of goods available. 12,945. 12,945 plus 143,750. Total is 156,695. 156. 156,695. Now, less closing inventory. Less inventory. And inventory. Is 30th November 2021. That would be how much? Closing inventory. 12,830. Closing inventory. 12,830. 12,830 is the closing inventory. 12,000. Put it in a bracket. 12,830. And here we get cost of sales. Cost of sales is how much? 156,669. 156,695 minus 12,830. 143,865. 143,865. This is our cost of sales. What we need to do, keep it in bracket. Okay. And a line over here. And we get gross profit. GROSS. Yes. So 203,600 revenues. 9,735 is your gross profit. 9,735 is your gross profit. Now heading expenses. See expenses. We have operating expense, rent and rates, wages. Sorry, class. Okay. Rent includes 2,250 for 3 months, October to December. So Now, first expense is operating expense 12,920. No, sorry, rent and rates 12,460, I think, and there's a payment of three payments. ah, I'm sorry, class. Okay, now what we have to do here? First expense, rent and rates, rent and rates. The amount of rent and rate was 12,460 minus prepaid. The prepaid was for 1 month. Getting my point? This rent is for 3 months. October, November, December. So December rent is should be prepaid because December has not yet started. We are on 30th. So 2250 divided by 3. So 1 month is 750. So we are going to put that at 750 minus 750. Okay. 12460. 12460. Answer is 11,710. 11,700. Then second expense. Second expense is this one, operating expense. 12,920. 12,920 and the adjustment is accrued operating expense 415, so we have to add that. Okay. Now operating expenses. Expenses. It was how much? 12,920 the figure plus accrued was how much? 415. Okay. So 12,920 plus 415 1 triple 5. 1,335. What next? Wages 24,380, and I don't think so. We have no adjustment of wages, so we will put directly wages over here. Wages. And the amount was 24,380. Next. Depreciation on equipment is 25% using reducing by as well. So what we have to do? Equipment at cost 40,000 minus provision 17,500 multiply by 25%, 5,625. So we report depreciation over here. It's not depreciation, it's depreciation. 5,625. What else? Provision documents 4% or 3%. 3% is 9,800. Multiply by 4%. 392. Provision for it was at 295. So we have to increase minus 295. That is 97. We have to increase provision without tax by 97. How much? 97. Okay. So if we add all these expenses, we'll get here total expenses, and that is 55,000. 5,147, and right here total expenses. Now gross profit minus total expenses. Gross profit was 59,785. 4588 is your this is your profit for the year. Okay, done. 7 marks. Okay. Statement of changes in equity for M Limited for the year ended 31st December 2022. So we will do on 1st December 2020. What was the amount of equity share capital? General reserve and general reserve. What we do, we go back to question. Now see, these items are given. What we share 20,000, general reserve 3,000, general 2037. Okay. Now ordinary share capital 20,000. Yeah. General reserve 3,000. Retain earning 2037. Sorry. 2037. So total was how much will be total? 23, 24, 25,000, 37. 25,000, 25,037. Okay. Now, I think there is no change in dividends. So, ordinary share capital, so it would be remain same 20,000 at the end of the year. General reserve. So, we have to see the adjustment. No dividend outstanding 30th November 1,000 transfer to general reserve. So, what we have to do? Transfer to general reserve. Transfer to general reserve. 1,000. So, total general reserve would be done. Okay. Now, 1,000, and here what we have got, we forgot. 1,000 we have got from zero impact. There is no impact of this transaction on. Now, dividend. Dividend paid. Dividend paid on this is 1,600. So what we have to do? Dividend paid. Deducted 600. Okay. Okay. And last thing, profit for the year. Profit for the year. Statement 4588. 4, 5. So now, right, 4, 5. Now, 2037 minus 1000 minus 1600 minus 2 plus 5. 2005 plus 4000. Okay, now here 25037 minus 1600 minus 4588. So it is 18,000. 25037 minus 16 minus 45. Oh, 25037 plus 4588. 28025. 28025. Now the total from this side is 20. Now check from this side 20,000 plus 4,000 plus 20. Yes, that's correct. Calculate the liquidity ratio of M Limited at 31st December 20. The answer should be corrected to 2 decimal places. So current ratio means what? How we calculate current ratio? Current assets. Uh, current assets divided by quick assets divided by current liability. Getting my point? So what are the quick assets available? What are the quick assets available? Inventory is not quick asset. That is trade receivables and minus irrecoverable bad debts provision. Sorry. Again 9,800 minus how much was provision for doubtful debts? 9408. This amount of total debtors or trade receivables. Plus 162 bank plus 162 bank and yes, this 750 plus total 10,320 10,322 current quick assets. 10,320 total ratio. Now, current liabilities. Current liabilities we have trade payables 11,585 plus two liabilities 400 plus 1,000. So quick assets ratio, current liabilities 12,000. So it means is equal to 10,000 0.86. This is what next? The managed actor individually plans to buy new equipment to be used to improve the profitability of the group. She's considering whether to fund the equipment by issuing further auditions and requesting a bank overdraft. You know, equity and debt financing. This is the topic of equity or debt financing. You might have studied in your BS. In all the cases, I think equity financing is better than debt financing because debt financing needs to be redeemed. And when she's taking bank overdraft, it means this is a current liability and she has to pay uh, heavy interest and along with the principal amount and within a year she has to pay. Getting my point. So I think that's all for today. Okay. That's all for today, class. Inshallah, I will come up with the inshallah AS paper 2, inshallah. This week. So, mashallah, O levels June 2022. Both papers are done today. Paper 1 and paper 2 also. Okay, thank you. Take care. Allah Hafiz.